The Bangko Sentral in its monetary policy statement last Thursday flagged higher rice prices as it delivers a 25 basis point cut, reducing the key rate to 5%. In the statement, the Bangko Sentral said possible electricity rate adjustments and higher rice tariffs could raise inflationary pressures over the policy horizon. Our next guest flagged as early as January this year the risk of higher rice prices. With us now for more is Diwa Guinigundo, former Deputy Governor of the Bangko Sentral ng Pilipinas and Principal Advisor of Global Source Partners. Good to have you again, Diwa. Welcome to the program.
Hi, good morning, Kathy, and thank you for this invitation.
All right, so rice dominates the weight of food in the Consumer Price Index. In fact, food is the heaviest among all other components. So what now will the suspension of rice imports mean for access to rice and rice prices?
Well, rice indeed accounts for about 8.9% of the total CPI or Consumer Price Index basket. Now, this latest move, driven by Executive Order 93, bans imports of rice from our key suppliers like Vietnam, Thailand, and to some extent India and Indonesia. Now, this is supposed to help farmers protect their prices, their gate prices. However, I think we also need to realize two things. Number one, this is not just a question of protecting our rice farmers from very, very low gate prices. Remember that they are also consumers. After selling some of their produce, they end up buying their own requirement for rice. Now, if price is banned, particularly regularly milled rice, the tendency for rice prices is really to go up. And I think even before the rice ban took place starting today, okay, rice prices have started to go up. So that is something that we need to realize. Secondly, it's not just a question of supply being or coming from importation. I think the government should also focus on the structural roots of why we have very expensive rice in the Philippines, no? And that involves land use, production system, providing infrastructure support to the agricultural sector. So these are all the things that we need to remember. And
So
moving
both
forward,
structural reforms, the need to introduce structural reforms, which we haven't, as well as considering market dynamics. You already flagged that there could be another increase in inflation this year and next because of higher rice prices. So in what way then do you think this will change the kind of trajectory that the Bangko Sentral sees for inflation, because it already projected 1.7% this year, 3.3% for next, and 3.4% for 2027?
that's why I would not be too sanguine as to say that the BSP has all the monetary space to reduce monetary policy or to ease a monetary policy. There are risks in the horizon, not only in terms of a possible continued ban on rice imports, because the so-called bumper harvest is not here to continue. We have 2026 and 2027 where rice could turn a different way in terms of production and therefore market prices. Secondly, the other risks would be electricity rates. There are existing petitions coming from NGCP, National Power Corporation or NPC, for adjustment of the rates, no? Transmission for NGCP, distribution for Meralco, and power generation for NPC. Now, this could also impact electricity prices in the Philippines. The other point is the commodity supply shock. This is something that we may have to reckon with towards the end of the year and next year. La Nina is about to come. Now, finally, the geopolitical issues. There are tensions, there are frictions in global trade, and that could also affect the supply as well as logistics of commodity prices, including rice, and that will have to be incorporated, considered by the BSP in terms of its projection in 2026 and 2027. And I think easily, if that materializes, that could add what, zero point 0.5 and even 1 percentage point to their forecast for the next 2 years.
It's like a lot of homework for the Bangko Sentral, from the prospect of higher rice prices to more ghost flood control projects. As you see, we're having that Senate hearing right now, live as we speak, and that is continuing. You noted in your August 29 Business World column that the biggest drag in our economic momentum is not inflation nor interest rates, because they've been tamed. You mentioned that it is corruption, plain, cruel, and devastating. Could you quantify what that means for taxpayers, as well as local and foreign investor confidence?
Well, it's difficult to quantify this, but let me say that yes, we have bureaucratic theft. To use what I wrote in that column, corruption of such a magnitude actually weakens our capacity to grow. And if we're not able to grow based on our potential, and our potential growth has been coming down, precisely because investment resources that could have increased our capacity or our potential capacity to grow have gone down, precisely because of these congressional insertions and shifts from one expenditure item to another expenditure item. And that means lower growth, lower employment or job opportunities, and therefore our less capacity to invest in human capital development, like good public health, good public education, and social infrastructure projects. So indeed, the cost of corruption is very, very enormous, Kathy.
And that conversation continues at the Senate hearing as we see it live. Thank you so much for your insights, Diwa Guinigundo of Global
Thank you
Source
very much.
Partners.